Hi, I'm Ali Patterson and welcome to the Paytech Show. In today's episode, we're going to be understanding how and why the pandemic has caused a massive leap, not just in payment technology, but also its uptake in consumers and financial organizations alike. With borders around the world closing, cross-border payments still need to be open. With huge regulatory complexity already in place, how can banks and fintechs alike offer up a smooth payment experience? To find out more, we brought in top speakers in the payments industry into our digital studio. From Nordea, we welcomed Erik Zingmark, who heads up transaction banking at this dynamic bank. With Erik providing the perspective of a tier 1 bank, we wanted to hear how financial service companies like Ebury were also looking at the current set of challenges in payments. So we caught up with Toby, Ebury's Chief Technology Officer. Rounding up our lineup, we have fintech finance regular and payments expert Bradbury from Acuity to highlight the inner workings of the changing payments scene. With that in mind, I thought it'd be good to start out to find out if it had been the regulators or the increasing innovation in the payments tech that had spurred this payments propulsion forward. Let's talk changes in the payments industry. Have the biggest changes, have they been down to technology or has it been all down to regulation?
I think that the pressure of the user community that drives the technology innovation influences the regulator. I think it depends on who's in power at the time in any one country. Like in the UK, the regulations started to be loosened when we had George Osborne as Chancellor of the Exchequer. The FCA and other regulatory bodies in the UK that govern what we do started to loosen the apron strings a little bit and gave us more flexibility to deliver solutions. But they were pushed into it by the government. Really, they were pushed into it. But it was like two forces coming: the user community driving the fintech change, forcing the government, the regulator, to give us more flexibility so we could deliver more competitiveness. I mean, ultimately the driver was to loosen the control of the banks on financial services and to give other people the opportunity to deliver more innovative products, more competition.
Well, I think it's led by rules and regulation. So PSD2 and the opening up of payments to essentially all payment service providers, away from banks, has been the main driving force. But of course, on the back of that, as those regulatory opportunities have opened up, technology has stepped in to provide services that people like us can both utilize or indeed build in order to provide our customers with service that would otherwise only ever be provided by a bank.
On the subject of international payments, we're obviously in the middle of a pandemic, lockdown 2, electric boogaloo. How have kind of cross-border international payments as a whole, how's that changed since the pandemic? Because I would suspect that the sheer volume of international transfers has decreased, but equally a lot more postal service style imports and exports.
It's interesting, actually. Yes, I, like you, thought that the amount of payments overseas would drop because there'd be less business going on, effectively. And in the early days, that wasn't true. In the first 6 weeks of lockdown, we saw an uptick in payment volumes going through our portal. And then it dropped off. So some of our bigger payments clients saw a drop, maybe 20, 30% drop year on year in volumes for a few months. And then it's picked up again and it's gone ahead. So I think there's an introduction of new types of business models generating more payments. I think things like repayments, which is a bit of a sad thing to have to mention, but it's a growing marketplace. Repayments of, airline tickets, concert tickets, things that were booked in advance, things that then we came out of lockdown, people started to rebook again, and they're being repaid. It's all kind of generated more, not just domestic payments, but overseas payments. So I think all in all, the number, I think when we get to the end of the year and we look at the volume of international payments is probably going to be higher than it was last year, even with COVID.
Is that in terms of the sheer number of payments, or in terms of value? Do you suspect?
I think it'll be both. Actually, I think the volume of payments will have gone up, and the overall value for all those payments have gone up. The average. It's difficult to give an average because you've got high value, low volume payments, the millions, the hundreds of millions, and so on. That's probably stayed about the same. You've got low value, high volume, like remittances, and I think that volume might have gone up, but I don't think the actual value per remittance will have gone up.
How much of an impact do you think that Swift GPI has had on the industry, and do you think that would have come about if it wasn't for the likes of Ripple?
Without Ripple, GPI wouldn't be where it is now, definitely. I think Ripple kicked Swift where it hurt, and the fear that Swift had that their correspondent banking infrastructure would be stolen away from them because of Ripple geared them up into using their existing network to create GPI. And I think GPI is a good thing, a very good thing. And I think people who use it are very pleased it's there now. So there's far more transparency, it's faster, you're able to give more information to the sender of what's happening to that payment, where it is, which correspondent, what the charges are. It's a great thing, but I totally agree. I don't think GPI would have been where it is now, or even have existed if it wasn't for Ripple. But it is a good thing, GPI.
I think, first of all, payments have to some extent always been a scale game. And it's definitely becoming more a scale game than ever before. So you need to run large numbers of transactions in order to be able to be competitive on the price side towards our customers. So you need to attract volume. But of course, if you attract volume and you cannot handle the volume in an efficient way, then you create cost, and you create probably a less positive experience for the customer. You can see incidents, and you can see a lot of things, right? So the state I think most banks, including Nordea, is in right now is to sunset legacy, introduce new technology, constantly move towards standards, harmonization, making use of standards like ISO, making use of APIs more than obviously all of us have been using APIs for a long time, but I think we have another view on what APIs can do and how they should be handled, so to speak, nowadays. In Nordea, we are, since a few years back, we are throwing out many years of legacy, 25, 30 years of legacy, throwing that out, replacing it with new technology. So we will have one payment engine more or less instead of tens of them. And we will have one core banking system, account system, ledger, instead of many. And we are concentrating our data to one data warehouse. And that will, of course, enable us to become much more efficient within Nordea. Then we are engaging with Swift, we are engaging in P27 together with 5 other Nordic banks to create new rails outside the bank. So we, of course, it's not enough to be efficient within the bank, so to speak. We also need to see to that our surroundings are efficient. And there are numerous initiatives ongoing where Swift plays an important role, where P27 plays an important role, and there are other opportunities as well, where, for example, most banks are looking at what role does an API play in the payment kind of processing over time. We have in the Nordics quite efficient domestic payment processing, but we all, I think, realize that the international or cross-border payment processing needs to develop, and Swift is one answer to that, but there are probably more of them. Then of course, online first or mobile first, depending on what customer segment we talk about, that puts a lot of expectations and kind of requirements on how we set up our technology and how we look at our technology. And I think up till recently, many banks have been able to provide the customer with a feeling that things are modern by fixing the user interface more or less in the channels. New color, simpler, managing around, all of that. But behind that nice interface or upgraded interface, you still have your legacy, right? And you will come to a point which Nordea realized 5 years ago, that will never make us fully digital. We will never be able to provide what the customers will be asking for and already are. And that is just name of the game. Everyone has to go through it or outsource it to someone that has done it.
Very, very well said there, especially around it's not just about being efficient for yourself, it's the surrounding area.
Yep, it's an ecosystem, right? So it needs to, if we have a weak link helping a customer to send a payment to whatever country, the customer looks at us with their dissatisfaction. So we need to have always an end-to-end perspective on things when we develop.
We've got to talk about Swift GPI. What sort of effect has this had for you guys over the last, really since its inception? How has that changed the way that we think about international payments?
GPI has been super cool, actually. So we were the first non-bank to join GPI. And what it really allowed us to do is just to have a look at, and for the first time really, to be able to track an international payment from the beginning to the end. And what this really showed actually was fascinating. It showed that actually international payments were pretty quick, and we see that 98% of our payments are sort of getting to the destination, and some pretty exotic destinations within 30 minutes. That is extremely usable, and that's what GPI has really been able to tell us. It also helps us to know that perhaps, for example, a payment has arrived actually at the beneficiary bank, but the reason the beneficiary hasn't received his funds is because it might be the beneficiary bank that's doing a lot of checking to see whether this payment is good or not. We see that a lot in China, for example. So it's not really the correspondent banking chain that's being slow. It's often the final beneficiary bank that just wants to do final checks before crediting his own customer with the funds.
Looking at GPI, there seems obviously a huge amount of opportunities with the information on the payments. What's some of the data that is just not being used there, that just hasn't been tapped yet? What's the opportunity with this data that is yet to be explored?
There is a lot of data. If you look at Swift message formats and the amount of fields that have to be populated with data, you would argue that most of it is irrelevant to a corporate entity or even to a bank. They're filling in lines just to make sure that the payment straight through processes. There's the pre-validation process of that data, which I think is a really good and useful tool to have. How you can, once you've validated an account belongs to an entity, what else could you do with that data? Not a lot more, really. I think the correspondent data is very useful, but I'm not. I think what the world wants is to know more about how does that payment relate to an invoice or a purchase order and things like that. So if that data is included inside a message, then it becomes very useful.
Let's talk about Validate, which is, as a product now from Acuity, I imagine it was one of the reasons behind the acquisition. What's the problem that Validate is solving, and how successfully, looking back at what we've discussed in terms of real-time payments, how does it solve those particular issues?
So, if you're a fast-growing payment provider, whether it be the foreign exchange players who've become more payment providers, or fintechs new fintechs like the currency clouds and Revoluts of this world, the issue is, how do you grow exponentially without having to have lots of people there fixing errors? And the two key errors that occur with payment failure are data error, as in the data you put in there is either incorrect or out of date because things change. Something like 7,000 changes a day around the world with bank BIC codes, for instance. Or it's human error because we're all, a bit stressed sometimes. You type something in. How many times have you sent a text to someone and it says some gibberish in there because you haven't checked it, because it's just human error? So what we did was we created a solution that make sure that the data is up to date every day. All the data components, all the rules, everything up to date. And then if somebody inputs something incorrectly, just through human error, it looks at that error and it suggests alternatives that will make that information then correct, and it will straight through process. So we did that, and we surrounded it with lots and lots of tools. So you could deploy an API from our system in minutes and then use the tools to configure. So there was no coding needed on our customer side. So the reason why people bought from us was the absolute ease of deployment. It's a non-project. And what it did in order to automate straight through processing without human intervention, so that they could grow exponentially without having to grow back offices. So that's the reason why we're successful. And that's the reason why, one of the two reasons why Acuity bought us.
Oh, I don't know, Mark. I like the idea, surely it must be a lot more efficient just to send wave after wave of outsourced people to solve this issue.
Well, yes, because it's costly. Even if you find a very cost-effective outsourced supplier, but you still need, in a company that's going to do 1 million payments a year, and typically we found that the error rate when we first talk to a client is that their STP rate is about 70%. So that means 30% of payments have to have some sort of manual correction. Even when they're using our system, their customers are inputting errors on their initial entry. I mean, the payment doesn't go because we stop that and we correct it. But even then, 8% of initial entry has errors in. So if you're doing 1 million payments, quick bit of maths, that's 80,000 payments that if you weren't using our software, you would have to fix. And how many payments can you fix a day per person? And then start working it out the cost. So the cost of fixing a payment is £50 on average, taking into account human and other costs. But the other costs that we can't quantify, which is huge, is if a payment fails, two things can happen. It can affect a supplier relationship because you're not paying them on time. And B, for the supplier, it means that they're out of cash and they can't do other things they wanted to do that they thought they'd be able to do because they're going to have that money. So there's lots of other costs. So having a totally automated STP so the money gets to where it is and it's predictable is massively important to everybody involved.
When our customers want to make payments to beneficiaries, they need to put their details in, and Acuity Financial can help us with understanding if those details are correct, whether that particular account number and scheme or that account number works with what scheme in a particular jurisdiction, because of course that's quite complicated now. Can I send something by SEPA Instant? Or can I send something by SEPA? It's actually quite useful to be able to know before you even hit the scheme and get an error. It's actually better to understand the routing, up front. And of course, that's where Acuity Validate is extremely useful, because we can get those types of information, not just is this IBAN valid, but also which schemes is that IBAN valid for.
Never, ever lose track of the customer. No matter how interesting a technology is or a business model, you need to step out of the building, look at what you are actually saying to the customer and offering the customer. If it doesn't make sense, you need to redo it. And it sounds super simple and everyone is saying it, but you get so carried away in new stuff that you risk losing that perspective. And then, as we have talked about today, I think end-to-end transparency on payments, end-to-end, standardize as much as you possibly can. There are only winners through standardization. Standardization is not preventing innovation. It's allowing innovation to happen because you make your surroundings simple and efficient. So, look for standards, look for end-to-end, throw out as much as you can of old systems and products. And I think that is at least my experience from having worked in a few banks now, that we tend to spend relatively too much on new and too little on sunsetting. So you're building up kind of a pile of systems that you never feel that you can afford to sunset. The thing is that it crowds out other things because you have to pay for old stuff as well. So you need to dare to say, okay, we can spend 100 this year. Let's force ourselves to set aside 30 of those 100 to sunset instead of putting 5 to sunset. So I think that will be very important. And I think that is what banks didn't do during the last 20 years. And now we can learn from that.
Well, that's all we've got time for on today's episode of the Paytech Show. It's been fascinating hearing how all these organisations are looking to operate in this new paradigm. As Mark and Toby mentioned at the beginning, there's been huge changes in payments regulations on top of the pandemic, yet innovation seems to keep making payments faster and more visible, which in these uncertain times will become all the more important. Thank you to our guests and viewers today, and you can catch the rest of the show over at fintechf.com. See you next time.